The purpose of this video is to discuss pivots. What we have on the screen is a 5-minute bar chart with a standard pivot indicator from TradeStation. We're going to discuss only high pivots, but the principles, of course, apply the same way for low pivots. Now, a pivot, first of all, is defined as any bar where the previous bar high and the subsequent bar high is lower than the current bar. So that would generate a high pivot for us. So for example, this bar, previous bar has a lower high, subsequent bar has a lower high. Same here, previous bar, subsequent bar. Now this bar has an equal high, but this is a lower high, and so therefore that's your pivot bar. And over here, previous, subsequent, lower highs, so that's going to become a pivot bar. Well, why doesn't it show up at this time? It's because we've set up a right strength of 7. That means that it can't show up until 7 bars have closed to the right. 1, 2, 3, 4, 5, 6, 7. 7 bars haven't closed to the right yet. Once that happens, this will show up as a pivot. So the right strength results in a delay. If we have a right strength of 1, we only need 1 bar to close to the right before the pivot shows up. But if it's 7, well, we've got to wait for 7 bars to close. And therefore, if you're using the pivot definition for the purpose of actually making a decision about a trade, you're going to be behind the curve because it's going to take you a much longer period of time. You're going to have to wait before the pivot actually shows up. We don't want to do that. But it's important that we understand that's how it works. So that's why you don't see a pivot here. If we set this up with a right strength of 6, well, 6 bars have closed. Okay, so that's going to show up. But if it was set to 7, it won't. So now the question becomes, what is the definition that you want to use for your pivots? It's completely discretionary. Now, right now, we've got this set for 5 bars back for the left strength, 6 for the right strength. Let's suppose we change this to 1. A right strength of 1 doesn't really change things too much on a 5-minute chart. So the question becomes, how can we set up a chart using seconds to emulate a chart using minutes? That's fairly easy for us to do. If we want to use a pivot definition of 5 and 1, but for a 5-minute chart, and use a 30-second chart for our actual trading, then here's what we need to do. Let's change this over to 30 seconds. Okay. So the first question becomes, how many bars, how many 30-second bars are in one 5-minute bar? Well, obviously there's 2 per minute, so 2 times 5 is 10. So you have 10 bars that make up one 5-minute bar if you're using 30 seconds as your interval. A left strength of 5 would mean 10 times 5, or 50. So now our left strength on the 30-second bar is equal to a left strength of 5 on a 5-minute bar. Now, it's not going to plot exactly the same way because the right strength is 1. But if we want it to look exactly the same, we know that this really needs to be 10 because there are 10 bars, 10 30-second bars in one 5-minute bar. Now you have it. So now we're emulating exactly the same setting as we would in a 5-minute bar, with a left strength of 5 and a right strength of 1. So that's how that works. But the question becomes, well, what is it that we're really trying to display? If we're trying to read the trend, then we don't need to use a right strength that is very fast. We can use a right strength that is equal to our left strength, whatever that happens to be. But if we're actually looking for the indicator to help us make a decision about executing a trade, we want a right strength that is much faster so that we get the read of the premium displayed for us as quickly as possible without creating a lot of noise. So now let's place our indicator on the screen. And let's check our settings. So this is a 30-second chart. A left strength of 50 emulates a 5-minute bar chart with a left strength of 5. Or right strength of 50 equals the same thing as a 5-minute chart with a right strength of 5. The indicator will also plot any new highs on the premium or new lows on the premium after a particular time. So this gives us a lot of information about the premium when we set it up this way. These dots represent new highs or new lows on the premium. So using this pivot definition, we don't see a lot of plots. And this way, we're able to see what the overall trend is. In this case, for today, which is the 15th of June, this is a new high on the premium. So in the light of that, we're expecting that this market is going to continue to rally up and test that high, because this is basically a naked bar. We moved into the low and became divergent here on a 30-second bar chart. But again, that wouldn't have showed up on the chart until 50 bars to the right. That's too slow if we're going to use that for trading. But if we're just using this to see whether or not we're going up or we're going down, then it's just, we can use a much larger setting. So what does this tell us? Well, this is a naked bar using a 30-second chart, and that's a new high. And when we tested that high over here, we didn't go higher. In fact, we dropped even a little lower. So for good reason, we can expect that this market is going to move down some, which of course it is doing. So once we saw this particular pivot, and of course we're measuring this high, because that, we're already expecting this market to move up, and that's a high bar here. We need to test that price. We did so over here and got a lower high on the premium, and therefore the trend at the moment is down. The overall trend, however, should be up. So we're looking now for a low pivot from which to move the market back up, and hopefully it will. But that just gives us the trend. If we're actually trying to trade this, trading the lows, all right, well, we need a much faster setting, but we don't want it too fast. So we can use 50 for our left strength if we want, and a much faster setting for our right strength. So the question is, well, how fast do we want it? Well, it all depends on how fast do you want it to be displayed. So if we set that to 2, that means it'll take 2 bars before we get a read on the premium, before we actually know what the indicator says the low of the premium was. Or for that matter, the high of the premium. Doesn't really matter, but we're looking to go long here. So when we set it up that way, this read would take 2 bars before it would plot. And if we look at our current bars, for example, last bar that was plotted, that was the low, but we're still continuing to move lower. And this could continue to move down because we're if we just look at our volume profile, it's going to tell us that. But it's going to take a couple of bars after the pivot before it actually plots. So what we want to do is anticipate. And if I look at my profile, I can see that the market is liable to move down to about 72 3/4 for that to be hitting a low value area. But at the moment, right now, I can see that the premium is divergent. The lows on the premium are higher lows. So we could get a little bump up here. So it's not really a matter of what is ideal. It's really a question of what it is that you're trying to achieve. So when it comes to actually executing the trade, you want the right strength to be a shorter number so that you can get the plot on the screen, which becomes important for you to know what the actual read is, but you don't really have to wait. You can read it manually. And this just graphically displays, are we moving in the right direction? Okay, now we got that read on the premium here, 349. All right, so that's a low from the previous pivot, which was 362. It now moved down to 349. That's a lower low on the premium. So when I blow this up a little bit more so you can see the definition, we look at these lows here. Obviously, we're getting lower, getting lower. That was a big bar down. We continue to move lower. We look at this. That's lower than this. That's lower. There was a little divergence here. Okay. Slightly higher than this bar, but overall we're still moving down, and we would expect this to continue to move down. And it will, let's just watch this here. We'll come back in a couple of minutes here once we see what happens when this goes lower. Okay, now we see how the market has continued to drop here. We've got a new low on the premium. So all we're doing is just waiting for this to drop a little bit further to determine whether or not there's going to be a pivot at a lower low. If you looked at this low on the premium here, and this price was tagged here, and this low is lower than that low. Now, you don't have a read on this, but what you can do is extend this to the left to determine whether or not you were lower. And you can see you're actually a little bit higher. This was lower than it was over here, as you can tell by just extending this to the left. But as I look at my profile, it's telling me, yeah, chances are we're going to continue on down. But it was a little bit higher, and for that reason, we got a little bump up. That was tradable if you wanted to scalp it. Okay. And you can also use this to move to the right, extend it to the right if you want, because all that is a trend line. But let's continue to watch as we expect this to drop down in the neighborhood of 73.25, 73.30. And we'll come back in a minute. Now, as we tagged that price here and you looked at the premium, what did you see? Slightly lower lows going on in here. But compared to the pivot bar over here, equal lows, but still higher lows on the premium. So what would you expect the market was going to do? What it's doing, moving up. And you see it took 2 bars for that to actually be plotted, but you could already tell that. You could already tell that just based on where the premium was. You didn't actually have to wait for it to plot. So if you were looking to maybe scalp this, you don't have to wait for it to plot. Just look at where it is compared to where it was, and you can see a pretty good or have a pretty good reason, to execute a trade. And you had this was a nice scalp. Still don't think it's gone as low as it should go, but the premium, well, that's very divergent here. Okay, so let's move off of that subject and just talk about the one question that was raised, and that is, well, what if we wanted to use a 5-second chart? Well, you do the same math. Ask yourself, well, what do I want to emulate? If it's a 5-minute chart, well, how many 5-second bars will make up one 5-minute bar? There are 12 5-second bars in a minute, so 12 times 5 is 60. Now you've got the root for determining how many bars back you need. 60. If you want 5 bars back, 60 times 5, that's 300 bars. So you change that over to 300. Change this to a 5-second chart. And there you have it. Now, of course, when it comes to getting the plot here, it's still going to take you 2 seconds or 2 5-second bars before it actually shows up and plots on the screen. Now, what does this tell us? Okay. When I look at this, the price of the premium here at the time of the first pivot, 374. Tested it again, it moved up to 382. That was a divergence enough to cause this to move up. We came back and we tested that price, but this time the pivot bar was down here at 368, lower than it was here. So while it is divergent from this low, it's actually a lower low. So could we expect this market to come back down? And I would have to say yes. There is some ambiguity in the divergence here. Because this really isn't that divergent. It is only slightly higher, than if you looked at this bar here at 367, it's a little bit lower, but we're at a lower low here, a slightly higher low than it is here. So there's a little bit of divergence here, but compared to the rest of these numbers, that's the lowest number. That's the lowest pivot. So I would look to short this. Okay. I think we're still coming down. So let's give this a few minutes and come back just to see if that's true. But in any case, that's how you manipulate the settings to tell you what it is that you're trying to capture. So the question is, what are you trying to emulate? And then how fast do you want it to plot? When it comes to making the decision to trade, you don't necessarily have to wait for it to plot to execute the trade. You can tell whether it's divergent just by looking at it. But then to get the big picture, it's good to have it plotted so that you can compare as you're making decisions of what to do. And having that information on the screen can be very helpful. Now here is the 1000 share bar chart, which shows a real nice divergence here, just on the ES itself. Nice divergent pattern here on the ES and divergent on SPY. So that was your reason for this thing to take off. But the premium says that this is liable to come back down. And that would also tend to agree with what's happening over here on our faster charts, or pardon me, our slower charts. We're in a little bit of a downtrend here. But we were also oversold here. So oversold at a higher low compared to over here is also a good contrarian indicator for the market to turn. So that also made sense. But now we have to keep our eye on the premium. And this may take a while, so I'm not going to continue the video. We'll just have to go back and look on our indicators themselves to determine whether or not we're going to get this turning back down again. But hopefully, getting back to the premium itself, hopefully this is answering your questions with regard to how to set this up. Again, just in summation, there is no ideal. It's really a matter of your own personal discretion. What is it that you want to display? Now it's just a question of, well, how do you go about setting it up so that it will display what it is that you want? Okay, and hopefully we've answered that question. So any further questions, you let us know. I'm Rod Kusanen, Spooman for Risk.